welcome to our webinar today. My name is Peter Mullen. You didn't see my screen, I didn't know that. Okay, here I am. Here's my email in case anyone wants it. Catch up. Here's our purpose for today: to decipher the credit reports and credit statements, and our agenda for the basic topics for today. All right, now let's go into the starting point. The credit reports are often the starting point for everybody. They are the collectors of information, Experian, Equifax, and TransUnion. A lot of the activities you all do, as you know, anything that's financial, has to do with loans or credit, is captured by these organizations, and they're put into one of their three reports. They have their own form, and so today I'm going to talk about the TransUnion version. I can't go through all three, we don't have the time, so I'll be using the TransUnion version and some of their information to provide you today. But here's what's generic about all of them. They all have 5 sections. The top one has to do with personal information. The next one has to do with your summary of really how you stand today and your scores. That's, again, just to be aware that if you've asked for the score or paid for the score, they don't automatically come with scores. That's another separate arrangement. Then all your account info on all your credit usage. If you have no credit usage, obviously there's not going to be any information there, but so some of these fields are optional based on what your history is. Then your public records. This is often new to people. They don't often know that their public records are something that show up here and do affect their credit. So it's good as a rule for you to know this. And then finally, inquiries, this whole idea of what affects you from how you or others view a report or use your report. We'll talk in detail about that a little bit later, but I do want you to first catch this very first important thing here. www.annualcreditreport.com is your way to see your own reports for free. I encourage you to do that. They're available weekly throughout the year of 2022. That's because of COVID. So the government has made them available not just annually, but weekly. And I would suggest you certainly pull them up and look at them. The more you learn, the better. And then the second point here is it's your ability also to dispute them. So as we talk about some of the information in these credit reports or other information, your way, your method to also say, come back and push that, hey, this personal info isn't right, or the account info isn't right, is through disputing via the annualcreditreport.com website. Okay, that's my intro. Now I'm going to drill down a little bit into the report itself and just give you the high level. Now I'm hoping you can see this, but I'm not expecting you to read it. My goal right now is just to hit you with the 5 main, the main topics here. I'm going to be covering 6 in a little bit of detail, and then I'll break it out and open up questions as we go through them. So the TransUnion report is what we're looking at. Top part is your customer demographics. Everything about you, your identity, your addresses, your past employment, your social, your date of birth, all that should be there. So that's really how everything's captured. Now you think it's just your social, but apparently, and I don't fully understand the behind the scenes, but sometimes your social can be correct. You can still collect other people's info. So it's a very bizarre thing. They don't explain why that's the case. So because 1 in 5 reports often has errors. The next major section that you'll see on any report, any of the 3, but this is how it looks on a TransUnion report, is alerts and special messages. So again, if something's been brought up to your attention, it's all done, I think, through an algorithm and through computers. I don't know how many humans actually go through this. I think it's all generated through some algorithms. But then that's all brought to your attention. The scoring, again, if this is optional, it may or may not be there. It depends on if you paid for it or not. But if it is there, you'd see a number, and recognizing that there's 2 credit scoring bureaus. They're called Vantage and FICO. So the 3 bureaus we said before, Experian, Equifax, and TransUnion, create the report, and Vantage and FICO score the reports. They give you the top 4 factors, usually is what they provide here. Sometimes it makes sense and it's written in English that you can understand, and other times not so much. Again, we'll drill into that in a few minutes. Now I'm just giving you an overview. So the credit summary is usually made up of, again, this is where dates, why I'm saying dates, rates, and weights. Some of your dates here and your rates come out of these reports. Okay. Public records, as I mentioned before, people sometimes are surprised. I'm not going to drill into these today, but just to highlight to you that they're here, and these are public, so that means that they're certainly seen by everybody. They're not just on your credit report, but these are things that usually are part of your town or your city, and they do make a difference on things. As an example, I have many folks who, amongst the many people who I do training with or classes with or counseling with, some people are just returning citizens. They're just out of prison, and it's a surprise to learn that while they were in prison, their child support continued or lack thereof, and so they've come to find out that they've accrued a lot of money that they owe, and they find that out, unfortunately, the bad way, because their inability to now get a job and do other things. So the message here is just to be aware of what's on the report. It can help save you and help direct you on things. The last big topic here on this page is your trades. That's the name they give it. It's largely all your credit. So your credit, your mortgage, any loans you're doing are all going to show up here. How have you bought? How have you paid? What have you done? So this is where the history part comes in. And as you might recall, might know, the credit reports are 7 years, or reflect 7 years in the past, from today backwards, 7 years. In some cases, it goes more. If you have things like a bankruptcy, they last 10. Depends on your state. But this is where you should be looking for the details. One of the parts that I know that I focus on a lot whenever I'm working with a client. And then the last page or so, and again, I had to slightly make this up a little bit, but your inquiries, this is really telling about, we'll talk about those again. This is when anyone's ever viewed your file. So this is your private file to a great degree. Nobody can see it unless you allow them. And when you look for credit, you're allowing people. And then credit information. So if you have any creditors on the report, you should have the right to see and contact them, because things aren't always correct. So that's the overview. Let me start by asking if anybody has any questions on that at all at this point. So Maddie, if there's any questions coming through, please let me know.
Yeah, no questions so far.
Okay. All right. So to summarize what we said so far, the credit reports are a great source of a lot of information, and they should be answering things in your financial life about who is doing things, you or others, how's that being done, who, what, what's been done historically, when it was done, in some cases, how it was done, how you paid, how you dealt with something, and in some cases, why you might have made a decision, or like if you're dealing with bankruptcy or something, maybe why something wasn't paid, as an example. So this is a great source of info. Let's drill now into, return to the top, and I'm hoping people can see this fine. I was debating on how best to show you the snippets of this. So I wanted to come back to the top on customer demographics, and I'll go slower through these to make sure that everyone knows the things they asked for. What do some of the terms mean? Some of the dates mean? What's significant here? I'm not just going to cover everything. There's all these codes. I'm not going to just cover the codes, only the ones that seem to make a difference. Okay. So the customer demographics, everything about you. You should be checking this for that it's accurate, because what you're trying to avoid is you're trying to avoid any pickup of information that's not you. So the financial tip here is your regular review of this at the very beginning, high level, helps you to know that this is you and not somebody else. You want to be sure that the information coming in is your accounts, and you're not being dinged because of the importance of credit. We just can't risk the fact of having incorrect info that that governs so much of your decisions and choices. So hopefully you're staying on top of this one. I don't think there should be any questions, but I'm open to any if they come out. All right, go into scoring then. Drill into this a little bit. Has a couple more levels to it. What you're seeing here is a couple different scores. Again, what I have here is I'm looking at this from a couple different levels here. The scoring number one should be what you've received as either Advantage or FICO score. I happen to be looking at a kind of a perspective here that's showing you as a consumer what you see, but also what someone as a creditor might see as well. So there's a reason I'm doing that, which you'll see in a second. But the scoring, what is it? It's a number from 300 to 850. The higher, the better, right? The higher your credit, 700 or greater is good. It's a snapshot view, so it's important for everyone to recognize, because people get so focused on scores that they are a changing number. So what does this represent? The number here, 590 in this case for Vantage, represents a particular score on the particular date that this was run, and it looks at what was already created by the credit companies, by the Experian, Equifax, and TransUnion, and they rate it, they score it. Now they do their best to come back with explanations as to what that meant, what were the top issues. They are placed in a most I guess greatest impact, or worst, if you want to say, from the worst to best. What's accounting for that score? So that's the way you have to think about it. They're going from what their perspective is, what's affecting you. But the models here is something you may not know. So let's start with what you do see and then what you don't see. What you see is the score and explanation for the impact order. So whatever TK is, that's just a code. 52, RF, those are codes. But some you may see, I know that I see the most, I wrote them down here. 12 is an oldest account, it's too recent. 97, too few accounts. These just give us a little bit of indicators as to how the scoring system, Vantage and FICO, came up with the score that they did, high, medium, or low. Now recognize too that these codes are not standard. So in other words, if you have a code 14 here, you can't just memorize it. It could be different across other systems. So you have to look at the explanation too and do the best you can. Some make sense and some don't. So that's that. For what it's worth, I can just make a suggestion to everybody too. Anything that we're covering today is all, you can find it all yourself. This is a good case of where Googling and looking online can help you tremendously. The source of everything I'm talking about today came from TransUnion Credit Report User Guide. Just Google it, you'll find it. And then the other things you'll see a little bit later, by the way, is coming from NerdWallet. It's all about what's called the Schumer box. So that's the sources for today. All right, what you may not see on scoring is the fact, and this is a good heads up for everyone here, that what you see that affects you is the scores up above, but many of the creditors who rate you are using a model that they purchase from the credit bureaus. This is a perspective we don't often think about, which is that all the reports that you see are paid for by the creditor who's rating you. You go to buy a car at Pete's car dealership, I'm going to be paying for one of these creditors, one of the bureaus, to create reports for me on you, my potential customers. So I'm going to ask them they're going to say, what model do you want, Peter? Do you want a really a conservative one, a liberal one? Do you want one that looks at these certain factors? And in this case here, maybe this is someone with real estate, someone who's a realtor. They said, sure, I want to have a bankruptcy model one. So therefore, the color or the flavor of this particular one, I wanted to focus in on these particular aspects. So if you go to buy a house with this person, that's a better example here, not a car dealer, you might be, the car dealer is given a heads up that, or the house dealer, that you in fact have these certain issues or challenges from the past. So therefore they come up with a 533 for you, when maybe another rating or another type of model used for you came up with a 590. The point here being is not the specifics, but the fact that you need to know different models are used for you. And if different models are used, you can walk from one vendor to another and get 3 different scores. What is the whole purpose? The whole purpose, don't forget, is not, these are really not meant for consumers. They were meant for vendors, because they're trying to predict whether the consumers who visit them can pay them back. And so the score is prediction of how you've been in the past. We're going to predict the future. Is this customer in front of you likely to pay you back? Will they declare bankruptcy? Will they be an insurance risk? Will they pay you back? And that's why you're rating them. So that's the business reality of this. So I don't think anyone's mission here is to memorize the codes. I didn't want to focus on that. I want you to focus on what the scores mean and where they come from. And then we're going to get into where does this come from? Like, it comes from the activities that we're going to cover. Questions, comments from anybody at this point, or anything coming through? I know people asked about some things. I've covered a few. Was there any things here that people said, like I look back at the comments of what you brought up, anything here that doesn't make sense? Financial, I don't know, terminology, or some of the explanations here so far?
It doesn't look like there's any questions right now.
Okay, then I'm going to move ahead. Balance our time. Okay, let's get to the credit information summary. Now this one has some good information in, and I hope that this is helpful for people. This is generally on the first page. This is usually at the bottom of the first page. And this is a great thing for me as a counselor and for you as a consumer, because it's a quick snapshot or a quick highlight of kind of where do I stand today. You'll see that it covers a couple different categories of your activity. It's going to tell you about the mortgages or the types of credit you're dealing with on the left. And I've mentioned here revolving, for instance, is credit. They don't use credit cards. They don't use the name credit card. They use revolving. They don't use the word like car loan. They might in the body, but not here. It's called installment. Any type of loan in which you pay a set amount, like your student loans would be here in installment. Mortgage is obvious, but some of the other things you'll see up above is kind of your summary, which highlights right from the get-go, why does this person have a 590 or whatever system they're looking at? There's some problems here. They got some negative trade accounts. They have some issues here where some things haven't been paid over time. There's a summary at the top right, number of inquiries. Okay, so those are some of the categories. Hopefully they're pretty obvious. Again, I'm glad to answer any questions I can from anybody. So that's the highlight. Let's go down into some of the tips that I would give you, because I wanted to not just cover codes, but to tell you what I look for and what I think you should look for in improving your credit. To the right is the available column. Now, most of you probably know that we often talk about credit. You should have a less than 30% debt usage. Well, you can flip that number the other way and say that's another way of saying you should have a greater than 70% available left over, right? Math is, you can do it inverted, either way you want to describe it. You should have less than 30% usage or greater than 70% available. So either way you want to describe it, you're trying to see from the right quick ratio here that you should have a 70 or above. That tells you you're doing well. If you're not, if you immediately see that revolving credit, so 2 credit lines that have a 40% available, that tells you you're using 60%, and that's why your score is probably low. So that's like clue number 1. Clue number 2 for you looking at this, again, these are just highlights, might be that you are seeing how many negatives. So credit always works in terms of months, right? So it's always looking at months and just basically doing a record for you in as compact a summary as they're able to do. And you'll see little numbers that will come up in another slide or two. But it's telling me, this tells me right from the get-go, there's 9 times in my world or this person's world where they didn't pay on time. That's one of the things we preach all the time. Paying on time is number 1, and they keep very tight records on that. They know every time you didn't pay on time, so you want that number as low as possible. And then finally over here is another thing, and this is true here of, this is again a TransUnion report, but it has it listed as a negative trade account. So what does a negative trade account mean? So here's where the code gets a little funky, but within TransUnion they talk about the MOP. Well, what's the MOP? It's the manner of payment. How did you pay? Well, every time in the code, in the next slides that we'll see in a minute, it marks everything as a 1, it's been paid as agreed, and then as a 2, 3, 4, 5, 6, as you see on this, the lower left, as something different if you didn't pay as agreed. So for this person here, how many times did she not pay as agreed? 1 time. She did not pay. So what did she do? She either paid 30 days late, 60, it could be any one of these codes. You'll see that later in the body. But this summary highlights right from the get-go that this customer has some good things, a good usage ratio. They have available credit left over. That's great. But they also have some negative occurrences, so maybe there's some things they can do to clean things up. Again, thematically, dates are critical, and we're going to go into that a lot with this next one. Okay, trade lines, trades. Again, that's the name they give it. I'm just telling you what it is, not saying it's good or bad. It's what it is. So again, recognizing here that we think in terms of credit cards, but they don't use the word credit card. They talk about revolving accounts and they talk about trades. Well, that's where this information is found. So looking at the credit records, this is a historical record. Again, think of the challenge they have. They're trying to squish 7 years worth of information potentially here. And they do that through all these codes. They obviously can't have endless pages of info. So they're trying to do what they can to have that information available to you. The remarks, I find the remarks are sometimes helpful, sometimes not. In the left-hand side, you'll see remarks underneath on the left-hand side of each one of the accounts here. Accounts in dispute or conventional mortgage. Sometimes they're helpful, sometimes they're not. It's at least their attempt at being human. Sometimes it's kind of unclear. But what's important, again, I'm going to point out a couple dates here that I think are critical and help you to understand why I think it is. Number 1, right from the dates open. The older, the better. The dates is in the, again, as you see, in the upper right side of every one of these accounts here. So when it's open is important because one of the criteria, beyond simply how that you pay on time, was having an old account. So I know that when I'm reviewing with somebody, and if I see a comment at the very beginning under the derogatory comments that says, you know, the code, whatever, code 14, they don't have any, everything is new, they don't have any old accounts, then I will go back and look at when they're opened. So I have a really good tip that's great to know. And the great tip is this. If you ask a family member, if you notice on your report or you're someone who's relatively young and has, you know, accounts that are not more than a year or 2 old, what's the clue here? We want to have them be 3 or 4 years or older. If you will allow them to be an authorized user on your account and you have an older account, let's just say you opened up a Visa card back in 2015, then that card has a date of 2015. It's 7 years old. If you allow someone else in your family whom you trust and is over 18, they can gain this date and have an older card. So here's an interesting thing in life. Most of the time, we're not happy to know that we are older, or something older is not necessarily a good thing. I just turned 65, so I'm very conscious of age right now as I'm looking at Medicare statements. But in terms of this, older is better. And that's one of the criteria by which your rating goes up. This is that part I was mentioning here about payment pattern, is one of those things that really is the record. So they obviously don't have a lot of real estate and space here. So ones are good. You want ones. In this case, on the TransUnion. Other cases, I've seen zeros or X's, whatever, often X's. The point being is whatever the code is, you've got to learn what it is for that report. And this set of ones here, as a counselor, I look at that and I said, that's great. That means right now that this client has 24 months worth of paying on time. All ones is great. And if you look up above, if you go up above where I didn't highlight, you see at the top right, it happens to mention for the ABC Bank. Top right, months 1 through 12 is 4455432. Maybe I'm crazy, but I'm starting to understand what that means. It means that back to the MOP I mentioned earlier, the method of payment, because that person had a 4, I know that that's a 90-day late. So that person was 90-day late, 90-day late, then the person was 120 days late, 90 days late, and so on. And it's in reverse order of today. So since this was run on May of 07, again, I know it's an old copy, but it's what they had, you can figure it out that that first one, that first 4 happened April of 07 and backwards. March of 07, February of 07, January of 07, and backwards. So that it travels back a year and a half's worth of months. So again, not looking for you to necessarily memorize the codes. Your takeaway should be, I should see all ones, and if not, I better drill into it and find out why. The as of date I've mentioned here, just simply to say, if you're wondering, people often say to me, well, I'll talk to them, or you're looking at your own, go, well, this doesn't reflect something I just did. Well, this date is key. This is where dates come in. It's as of May of 07. So if you did something in June of 07, it's not going to be here. So you kind of have to know when the cutoff date is for when things get included or not, is what you're trying to get at. It's keep you more sane and you're trying to figure this whole thing out. Last one I'll mention here, and again, open up to questions if any are there, I'm glad to have any, is late payments. This is a little bit of a repeat, but it's a little easier to read. It quickly summarizes how many 30s, 60s, and 90s do you have. And those are the kinds of derogatory things that you hope them all to be zeros. You don't want any of those. Just as we said with the one up above at the top, it has a 115. It means they had 130, 160, and 5 90s. I can quickly read that and see, you know, what kind of how they're doing. That's not good. You want them all to be zeros here, meaning that everything you've done is within at least the 30 days, if not right on time. So hopefully some of the crypticness of this, or the kind of the not as friendliness of this is coming out. Again, I will say I encourage you to read lots of stuff online. There's, again, the sources I would say, Google it and get guides. By all means, run your own reports, because that's going to be, it's going to mean something to you when you review it yourself. And by all means, seek out a counselor in your area. There's lots of private, a lot of public or private ones. Myself, I'm one who does this as part of the public record, and we do it for free. I do it for free. Moving on, inquiries. This is another topic here which you should know, and just very highlights, not a lot to describe. Simply, anytime you do an inquiry, it's whenever you visit a store or try to get a loan, or try to get credit, or buy a car, buy a house. There's 2 forms of which we do inquiries. Looking at your report never hurts. That's the law. That's why annualcreditreport.com was made available by law. It's because we all have the right by Congress to look at our reports without any bad things happening to us. That's called a soft inquiry. Hard inquiries are any time you apply for credit, apply for a credit card, apply to a store to get a car, to get a house. That's what's called a hard inquiry. Now, the problem I have with this is you'll notice it doesn't indicate which are hard or soft. The main thing you want to be aware of is all I can do is look at the most recent dates. So therefore, I know this is kind of funny, but just looking back for a second, in 07, and these are made up, of course, but you can see that would have been problematic in 07 to have 3 inquiries all in a row, January, February, March. You try to have 2 or less in a calendar year. But they're keeping record of everything. So if you or anyone ever looks at your report, it's on the record. Whether it's hard or soft or not is not on the record, and I don't know why. All right, last thing here, and we'll go into another topic, is your creditor contact. So this is valuable to you because anytime you're credit in the body and in the trade lines, any of that is inaccurate, or anything's inaccurate regarding the trades, the dates, the amount, the balances, any of that, it's all critical, then you have a right to dispute it. So there's various ways to dispute. The easiest way is under annualcreditreport.com is simply to go to the creditor, or I'm sorry, not the creditor, the bureau, and highlight one of the areas where there's a dispute and tell them. The other thing is for you to contact them directly through this information. Now, I don't have the full, just so you know, the full amount of these on the right-hand side here. El Paso, Texas, I don't have the Texas, I don't have the zip code, but that all would be there, and the telephone. So you have the ability to contact them. I would say, just as an FYI, if you do this, keep good records of what you do, track everything, write down their names, try to get their email, try to get everything you can, the name and date of when you talk to somebody. That's all important if you're trying to dispute something, because the record keeping they keep on you, you've got to also keep on them. It proves your case. All right, that's it on credit reports. I didn't know, Maddie, if there's any questions coming in at this point. Anything anyone wants to bring up so far on credit reports?
Doesn't look like there's any questions.
All right, so let's move on into kind of related in the sense that this is an important aspect about credit, credit statements now. And so this may be something that's new to you in terms of the term. I'm sure it's not new to you in terms of its look. The law from the Consumer Financial Protection Bureau years ago, when some of these laws about lending and credit came into play, they also invented this Schumer box, which is named after the Representative Schumer, that demands that this information be available to you. So I thought this was important for people to see on this whole topic of what are some of the terms, what does some of this mean? So what does this tell us? And again, please ask some questions if you have it. The box on the left begins to break out and talk about such terms as APR, which we're going to define in a second, but it helps you to know the rules and the guidelines under which they're going to charge you money. It's in your best interest, no pun intended, your best interest to be aware of what these mean and how that impacts you as you make a choice. So bottom line for this is this. When you make purchases, that's probably the lowest amount of interest you'll pay. But as you do other activities with a credit card, they have to declare up front how much this is going to cost you. So it's like disclosure. And they're clearly telling you, that's why I give credit to Nerd Wallet here. They've done a color-coded version here. So when you see the item in green, 24.99 APR for cash advances, it describes it on the right. That's the interest you'll pay if you withdraw cash, as an example. So again, making my point here, you could pay as low as 11.99 for just a regular purchase, but you'll pay up to 25% if you go and withdraw cash. They're going to charge you for it. This describes then how this will work and what your different rates are. Here's the thing that's about APR that people may not know, and maybe this will generate a question or two. People get very confused, and rightfully so, in spite of all this, that many times you'll see or know of a credit card when you first signed up, and I guess these are starting to be more and more rare. It's just a fixed rate credit card, simple fixed rate credit card. You're going to pay 10% for this credit card. That's the rate. Now, what does a fixed rate indicate? It indicates typically, again, depends on what you're dealing with, it typically means simple interest calculation, and it's compounded annually. So thus explaining why credit cards typically don't use it anymore, and they tend to hit more toward APR rates. APR rate is simply your annual percentage rate. But here's what you have to understand that makes them different from fixed rates. An APR, and this is going to be true not just with credit cards, but with mortgages too. I'm going to end with that. To point out this important element for you to be aware of. So this is where your awareness and your antennas should go up. APR also reflects all the other costs, some of them hidden, that when I compare credit card A to credit card B, it's by looking at the APRs of each one, not the fixed rate, that I can quickly know which one is charging me more. The APR, by law, has to include all the other costs that might have been hidden or not obvious, so that they're reflecting a rate as if everything you're paying that's clear and not clear is embedded into that rate. So I know this is confusing for some because it's not the fixed rate. It's trying to say effectively what you would be paying out of pocket is the APR rate. So I would say for most people, just focus on that. Forget about the fixed rate. Same thing with mortgages, by the way. Ignore the fixed rate is my thought. And look at APRs because it's one of the best ways for you to understand truly what I'm paying. So for those at the very beginning said, I don't understand, I don't know what I don't know, interest calculations confuse me, then my suggestion is read things like the Schumer box and understand what the realities are, what you're facing and paying. So what does APR mean in terms of the compounding? Remember, what compounding means is how often are they calculating and determining your interest. And in compounding, you have the ability to pay interest on interest. So that's what makes it more insidious here. It's not simple interest. If you have something at a 10% rate, $1,000 at a 10% rate, you pay $100, right? Pretty simple. 100,000 times 10% is 100. You pay $100 of interest. But compounding says, let's figure out the rate per day and then compound it, even though it's a small figure. They would take 10% divided by 365 and each day apply 1/365th of 10%. Now that may not sound like much, but as you multiply that each day, it's a building process of which you then are ultimately paying interest on interest. And here's the good part. Here's the good part, which I'm going to cover next. If you pay it off before the end of the payment period, this doesn't apply to you. So even if you have a credit card with 29.99% interest, if you pay it off prior to the end of the billing cycle, you won't pay a penny. I hope that answers some people's questions or helps you at least to focus in on what's important. APR is important. You should know what it means, and then look at your Schumer box. If you attend to the billing cycle dates and due dates are the most important part. So this is where dates and rates kind of overlap here. You can be smart and be on top of things, but if you let your money hold over into even one day, all that interest that was compounded won't ever hit you unless you carry it into one day over the due date, or I'm sorry, over the end of the cycle date. Due date is when it has to be paid. The cycle date is when they're including what they're including. So you want to make sure that you avoid paying the interest by getting it paid before the end of the cycle. All right. Let me see if there's anything. Oh yeah, I did want to mention one other thing here before we go here. All right, the other thing I want to just say then, people often talk about transfers of cards. So another thing to kind of read between the lines here, you'll notice up where it talks about the interest you'll pay on balance transfers, the blue box, third one from the top. One of the tips that you'll often see on, how to save money, how to avoid inflation, all this, is to transfer your money, your card, to another card that has a zero interest rate. That's fine. They're often introductory for a year. But don't you think that credit cards know this game? So what you'll pay in the new card is zero. However, in the process of transferring it from company A to company B, they get you. They make you pay a huge transfer amount. So it's not cheap. You've got to look at these details before you get a card, because transferring from card A to card B means you'll have to pay a great amount. So you may have to pay 5 to 10% of what your balance is to them. It's an awful thing, but those are the kinds of things you need to ask up front before you can get the credit card. Here's one good piece of information I found out. If you're within the family of cards, so let's just say you're within the Visa cards, and Visa cards probably have, let's say, 20 different cards, Visa. If you move from Visa card number 7 to Visa card number 11, in other words, ones with various features, products, and so on, there's no cost. So what you could research is, within the family of cards that I'm in, could I move to one that has cheaper, probably less, less points or less credit, or less, maybe some other things that make it cheaper. And you can do that by, check that out is what I'd say. Check it out. I wouldn't say just do it. I'd say check it out and ask. But it's another way to avoid transfer fee. Now let's go to this. The Schumer box still, this is the next part of it. This is just a couple things at the end, which again is, fees you might pay. People ask me, what is the best card to do? And I will say to them, I never answer that question. My advice back to you is to look at all the features of it. What are the fees, if any? What do they charge for these things? Transfers or cash advances? What is the late payment? So these are some of the features. I know a lot of people focus on the benefits they get from it, the cash back or the mileage. So here's a little revelation for people, and for those who kept on saying, look at the fine print, this is my little message for you. Here's one of the things you may not know, and many times when you sign up for a card or anything, there's a little box in the corner that says, by checking this box, I agree to everything. Well, there's about 18 pages of fine print, and this is often what is inside them. If you don't pay on time, many cards in their fine print reserve the right to, in a sense, I call it, break their expectations, the contractual expectations with you. We have a kind of this face value expectation that, they're not going to worry about it. I'll just pay them, they'll charge me interest. But they can do other things. It's often in their fine print, and I'm just giving you examples. They can raise their interest rate. You were at 10%, we reserve the right to double it. Oh, you owe us $1,000 in payment and you were late this month, then we're going to demand it all right now. Now, they don't normally do that, but they can. Then another thing, little known, I happen to have a JetBlue, great mileage, earning mileage, great. But if I was to mess up, they reserve the right to withdraw that. It's their program. They can do what they want. So just be forewarned. of some of the things that they do. Questions, comments, anyone?
It doesn't look like there's any questions right now.
Okay, let's go on to one last thing, and I'll open up for any final questions. Oh yeah, I did want to put this in. This is a great example of small print. People ask for that a couple times in terms of the registration, and this is a good example of what you don't know. So it's best to do a little research on your card, maybe even go and read the 18 pages of small print before you sign up, because you won't know this stuff until you read it. Last thing I thought I would show you, because this is a good relationship now to kind of a segue into still the concept of APR, which I had mentioned earlier is a key, one of your ways to kind of interpret, what this means to me. So here's an example of a real statement here. And this is a mortgage statement. So I'm making the jump from credit card interest to mortgage interest. But you'll see in this case here, this is an example of a fixed rate, a simple fixed rate stated on this Truth in Lending Agreement, TIL. It's also given at the closing disclosure just before you swap papers to close on your house. You'll see that the stated interest rate is 3.875. And that's by law, that's fine. That's exactly what it is. It's a stated simple interest rate. But if we go over to the third page of these documents, this is hidden behind. They talk about the annual percentage rate for this. So what does that mean? That means they're not lying, they're stating it differently to you. So the meaning that the 4.274 is your rate if they included all the other costs related to a mortgage now within your rate. So what are some of the things that aren't reflected? So your origination fees, your points, you might pay points to try and bring your interest rate down. Broker fees or other credit card charges they're going to charge you as a buyer. So again, you may not know what you don't know. What you may not know is what this means. Well, what it means is that if I see, you see an APR that's greater than the fixed rate, the little note to self must be, I can see 4.274 is higher than 3.875. There must be hidden fees here. It would hopefully spur you to ask them, what are they? Why are they here? What can we do about it? So on. To give you other quick examples, I just ran a couple examples here to go with it. So an example being if someone has, a stated interest rate of 4.5%, and therefore they have, points and fees of 2,800 and some other kinds of things, their rate is effectively 4.619. Someone has a rate of 4.4%, but they have higher points and fees, then their rate is effectively 4.36. Again, just an example that shows that the numbers there are higher than they may see. All right. I think that brings us to the end of this session. Thank you for attending with us, and join us again in July. We'll always do 2 every month, and we'll continue that pattern for the foreseeable future. Thank you all. Good luck in what you're doing.